We get a good thumbnail? Can we get into the real information on silver now? If that doesn't get people to click, I don't know what will. But we got to let some people figure out about why silver is so undervalued. Okay, so apart from the cheesy intros and the clickbait and the begging for the subscribe click, hit that red subscribe and the like button and all of that, this is actually what $100,000 in silver looks like. It's actually quite a bit more than that because it's not accounting for any premiums. It is just basically, let me get my handy dandy calculator out here from the dollar store. If you basically took $100,000 and divide it by 22, we'll just round silver's price to 22. It's actually, I think, 22.10 right now. Divide that, you get 4,545 ounces of silver. And so I just basically put 4,550 ounces here for good measure and just wanted to show you how much silver that really is. Because when you see it in front of you, it's great clickbait. It might have got you to click this video. Be honest. Put it in the comments for the algorithm. Okay. But it really is crazy to see this much for $100,000 because $100,000 today wasn't what $100,000 of yesterday was like. Now we have so much dilution going on, so much inflation going on, that the fact that you can still get this much silver for $100,000, it's kind of wild. Kind of wild. So these are all 100 ounces. This is 500, 1,000, 1,500, 1,500, 2,000. This together, each one of these is 250 ounces. So that's 5, 10, 15, 20, 25, 30, 3,000 ounces here. And then each one of these is a stack of 10. So 1, 2, 3, 4, 400 ounces. Then that's a 1,000 ounce COMEX bar. So that is 4,400 ounces. And this last pile here is where you'll get that last 150 ounces for 4,550 ounces of silver. If you want to see pictures of all of this and you want to see my lucky toad over here, go to my Instagram at Rob Soltan on Instagram. For all you know, these are chunks of aluminum. But if you want to know what they look like and you want to see actual pictures of them, go to my Instagram and you can see that there. Maybe it is chunks of aluminum. You never know. There will probably be a lot of comments like that down there in the comments. Anyway, let's get into the real information on silver. So here is the silver to gold ratio. I bring this up a lot in past videos. So right now, what I like to look for is the ratio breaking over 75 to 80 on the silver to gold ratio? And we saw at the beginning of all this in 2020, we saw it breaking to 114, almost 115 to 1 on the silver to gold ratio. What this means is at that time, it would take 114 ounces of silver to buy 1 ounce of gold, which is insane. So obviously that was a huge gimme back then, and it fell down to its bottom here at 65. And now we have seen another detachment on the silver to gold ratio where it is finally broke over where I find to be a golden number of over 80 on the silver to gold ratio, where that tells me this is extremely undervalued. Right now we're at 84.23 is what it's saying for the silver to gold ratio. We'll just round it and say it's between 83 and 84 right now on the silver to gold ratio. Now, why do I think silver is so undervalued? I'm going to get into the actual crustal abundance of silver and the fact that it's being eaten up by industry right now. But let's get into the first charts here. When the DXY, which is the dollar index, this is basically, what is the DXY? It is a measurement of how much buying power and how much strength the dollar has in the basket of fiat currencies out there. And we're seeing this artificial strength in the dollar. Despite all the dilution, all the inflation, we've seen this artificial jump in the dollar. Now, the dollar index has gone down from 105 down to 101 recently. So we're seeing it starting to correct a little bit, but it has a lot of room to fall. At the same time, we could see it go up a little bit more and provide us even more of an opportunity. But right now, it looks pretty ripe for a pullback. Let's get into the next chart. So I first want to bring up the DXY, that if the DXY continues to fall down, I believe we're going to see the silver to gold ratio tighten. And why is that? Well, when we pull up gold, this is the chart of gold back to 2011. The last bull run in gold was 2011, where we saw gold peaking out at around 1,900 an ounce. Now, gold has recovered back to that roughly 850 to 1,900 an ounce range that it had gotten in 2011. What's crazy is when we pull up the same chart on silver, and I've talked about this in the past, Silver was at almost 50 an ounce at that time in 2011, and it has not recovered. Again, gold has gotten back to that level. And the funny part too is we have inflation running rampant. We have industries that need silver more than ever. Electric cars, solar panels, all of these things need a lot of silver. The medical field, all of this stuff needs silver. But yet the industrial precious metal, silver, has not recovered and only gold has? That's very interesting to me. So that alone is very good reason to think, why is silver so undervalued? And why do we have a silver to gold ratio back up at 84 again? My personal target, not to be taken as financial advice. All of my videos are not to be taken as financial advice. Look, I'm just a YouTuber that uses silver as clickbait. Clearly, I shouldn't be giving out financial advice. So there's that. But hopefully there's some real information that actually is valuable to you in these videos. And jokes aside, I use the clickbait to get out the message on why silver is so undervalued and what custody of your money really means. And some people might need to go into an ETF with their silver. They might go into SLV. They might go into PSLV. I don't like either of those personally. I know one is better than the other, but I like physical bullion. I like to have the real thing because I don't need to ask permission for this silver. The problem with an ETF is that you have to ask permission for your money. You have to ask permission for your investment. If you go and you put it in an ETF, well, now it's who owns it? Who really has custody of it? And you might say, well, Sprott Silver has custody of it, or JP Morgan has custody of it. That doesn't really get me excited, but say they have custody of it. Well, you are trusting that your exchange, whichever one you use, whether it's, TD Ameritrade, E-Trade, whatever it is, Robinhood, actually has custody of that ETF and they're holding it for you. Now you got to hope that their app works and that they're going to pick up their phone if something crashes and corrects. All these different things prove that you don't really have custody of it. Somebody else does. I believe in physical bullion. I believe in holding the real thing. So there's that. But let's get into the next thing I wanted to talk about here. So I personally have a target. The historical ratio is roughly 15 to 1, 16 to 1 range is the historical ratio for silver to gold. And we're going to talk about the crustal abundance to prove this as well. But my target is more around the 30 range. I think the silver to gold ratio will be back at that 30 range that we saw in 2011, which would be a huge upside from here. How much upside? If silver went to a 30 to 1 ratio, let me grab my handy calculator again. So basically what you would do is you would take the current price of gold, which is roughly $1,855, and you would divide that by 30. That would give you a price of silver of $61 an ounce. Huge upside. What would this pile look like with a 30 to 1 silver to gold ratio? Well, let's times that by 45.50. And this pile would be worth nearly $300,000 if we saw a 30 to 1 ratio. And that's only if we saw a 30 to 1. I think that it could even go further than that. But that just goes to show you how far detached the silver to gold ratio has really become, because I don't see gold. The silver to gold ratio can tighten two ways. Either silver goes up while gold stays the same, or gold goes down and tightens it that way. I don't see gold falling down in this market. Do you? I don't think there's going to be a lack of demand for gold in the current marketplace that we're in. So what I think has to happen is silver will go up to tighten that ratio. Ideally, gold goes up and silver has to go faster than that to tighten the ratio. So you see both of them going up at the same time. But personally, I think silver is way more undervalued. Now, the next thing I wanted to show you here, let me pull this down, is these two charts. So this is the historical price of silver, the silver to gold ratio, way back. So if you bring it all the way back to the 1600s, you can see it was just a flat line. Now, why would it be a flat line of roughly 16 to 1? Probably because in the crust, it's roughly that. So the crustal abundance, this is in parts per million of gold. So of gold is 0.004 and of silver is 0.075. That gives you a ratio of 18.75. That means the silver to gold ratio in the actual crust of the earth is roughly 19 to 1. Now, again, if you go back to the silver to gold ratio, you'll see that it's well over 80 to 1 right now, but the crustal abundance isn't even that, which is wild. And that's why you see it for so long sitting under 20 to 1. The reserves, if you go into the reserves of silver, you still have a 10 to 1 ratio. It actually is much less. And then if you get to the production of silver, and this is from the last survey, I believe in 2011 or 2012, in an annual production, the ratio is 8.8 to 1. So the annual production of silver to gold is 8.8 to 1. Figures today are roughly the same. The crustal abundance is obviously the same, and the reserves in the annual production, we'll see in the future if they do another survey on it, but clearly it's not 84 to 1. Now that tells me that silver is extremely undervalued because if anything, let me pull back. If anything, what makes people think that silver is going to cost less to mine? What makes people think that the equipment is going to cost less? With inflation at these levels, what makes people think that it's going to cost less to pay the miners to mine silver and gold? It's obviously going to get more expensive to mine silver to the point where if it stays this low, miners are not even going to want to sell their silver. They're just going to want to hang on to it at a certain level. And that can't happen because industries need silver. Electric components need silver. These electric cars, these solar panels, all these things need silver. For all the people that are so into renewable energy, you need a lot of silver for your solar panels. It's the most reflective metal on Earth. So clearly, you're going to need silver. Now, do you think silver is going to stay suppressed at 22 an ounce, knowing all this information? I don't. My target is, like I showed you on my handy dandy dollar store calculator here. If you look that up, that is the price of what this pile would be if we saw a 30 to 1 ratio again, which I think is pretty easy. That was only in 2011 when that happened, and I think that it should be there right now. Why do I think it should be there right now? Well, let me show you. Again, just to close out the video, I wanted to make this video kind of short and sweet and my main points on why I think silver is undervalued. So hopefully you find some good information in this apart from all the clickbait. But again, if you want to see what these actually look like, go to my Instagram at Rob Soltan on Instagram. I also give heads up in the story over there whenever I post a video because sometimes YouTube doesn't show the notification. So please do subscribe and hit the bell and all of that if you found this information valuable. But also follow me on Instagram if you want to see pictures of all this stuff. And my lucky toad over here, he kind of calls it shots these days. But anyway, just to summarize this video, let me go back. Okay, so this is a silver to gold ratio again. And so again, in 2011, we saw, and I want to pull up, this is actually something I wanted to bring up as well in this video. So if we go to the DXY, this is the dollar index. This is just the 1 year chart on the dollar index. Let's pull up the all-time chart, and then let's zoom into the bull run in gold and silver. So we saw the financial crisis of 2008, 2009, and then we saw the dollar index peaking up at about 90, had fallen, recovered, and then right here is where we saw the dollar index fall all the way from 90 down to roughly 70 on the dollar ratio. Not the dollar ratio, the dollar index, rather, excuse me. So the dollar index crashed in 2011. This is after the financial crisis. We saw the artificial strength in the dollar, and then it crashed down. And at that same time is when we saw gold skyrocket. So what I was telling you earlier in this video, if the dollar index goes down, that means the dollar has less buying power, so it would buy less silver and gold because it has less buying power, which would make the price of silver and gold in dollars go up quite a bit. That's what we saw in 2011. So that crash in the dollar index then caused the spike of gold to go all the way up to roughly $1,900 an ounce. That was back in 2011. Now, again, we can draw a straight line, and gold has actually recovered to that high that we had in 2011. Silver, on the other hand, not even close. Not even close. Despite being needed in industry more than ever, despite having inflation at crazy levels, and silver is a great hedge against inflation, we see silver sitting way down here. Why is that? Maybe the market is easier to manipulate. Who knows? That's just a wild theory, not to be taken as financial advice. But some stuff is going on here where it just doesn't make sense to see silver this low in the price. I happen to think what will happen soon, just like we saw the dollar index here, this dollar index crash from June 2010 to 2011 here is what caused silver to do this. Go parabolic from here's June of 2010, 16 an ounce on silver, boom, all the way up to almost 50 an ounce. Now, who's to think that the dollar index is sitting at these crazy, this little drop here in the dollar index caused that. Look where it is today. You think that this doesn't have room to trace down? I personally do. Again, this is just my personal take on this environment here, but the dollar index looks awfully lofty. I didn't mean for that to rhyme, but it did. But it looks like it could have a lot of room to fall. At the same time, I believe in having a good cash position and making sure you have cash flow going on, but it looks really ripe here. Silver doesn't look like it can sit at 22 an ounce for much longer. It really does look like it's bottoming out, in my personal opinion. Again, hopefully this video was more than just clickbait for you and it was worthy of getting that subscribe click down there. If it wasn't, it wasn't. If it was, it was. If you hit the like button, really helps with the algorithm. I know it's kind of cheesy to ask for that when you have all this silver in front of you and ask for likes and all of that, but I hope that this actually puts it into perspective just how undervalued silver is. Thank you so much for watching the video. I will see you at the next one if you did decide to subscribe to the channel. And also, if you follow me on Instagram, you will see a lot more pictures of this. I think it's like the third time I've said that, so would appreciate it if you did that. Thanks so much for watching. I will see you at the next video. Signing out.